Hi, everyone. This is Jason Burak of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a first-time guest, but I was referred to his work by a good friend of mine. He is a very popular and rapidly growing video channel on YouTube about the gold and silver market and the economy. He calls himself the Wealth Watchman. I think it's a very cool name, and he's got like some 300 and Roman soldier pictures up, caricatures up there. Thank you for joining me today, Wealth Watchman.
Hey, Jason, it's good to be here, and y'all do a fantastic job at Wall Street from Main Street. I'm very pleased and to be here speaking with you. It's a pleasure to be here. So.
Why? Thank you. I mean, yeah, we've been doing this, I think, since 2009 or 2010, and you know, if you go back and on our archives on our channel, listen to some of those early interviews. They're pretty rough. I wasn't good at public speaking, so I think I've come a long way in the 7 years now since we've been doing this.
Yeah.
But my first question for you now, we have a new article out by Kuz Jansen of Bullion Star, and he's been one of the best investigators, researchers into the gold and silver markets. The Shanghai Gold Exchange, which we're actually, I guess, getting fairly honest data about the withdrawal numbers to know about real gold demand and also, I guess, some silver demand. Why do you think the Chinese have stopped reporting the withdrawal numbers for the Shanghai Gold Exchange?
That's a great question. I just think they're too honest and they're too high. There's such a huge discrepancy between the numbers that the World Gold Council says for Chinese gold demand compared to what's actually being demanded every week, every day, every month by the Chinese citizens at large, that I don't think they can come up with enough good excuses anymore as to why there's a 1,000-ton, 1,200-ton annual discrepancy. No one's buying the explanations. Kuz has done a remarkable job of getting to the bottom of the inner workings, the machinations of how their gold market works. He's laid it out in plain English for everyone to understand, and that's the problem. Everybody understands it. Everybody gets it. It's starting to become well-known mainstream knowledge that both the Chinese government and the Chinese people have an enormous penchant for precious metals, especially gold. Gold is their go-to metal. It wasn't always that way, but in the last few years, they have really gravitated toward gold over silver, although they do buy silver for their industry, and they buy silver for, collectors' things. Gold is the shining star of China. And for goodness sakes, if you look at the numbers from last year, nearly 2,600 tons coming out of the SGE, that's nearly 100% of what the entire Earth will bring to the table through mining. They bring more through refining that's added on. That's true, but that's just one country. Okay, that doesn't even include the 1,000 tons from India. It doesn't include central banks around the world. It doesn't include bullion stackers and investors like us. I mean, Eric Sprott several years ago said that there was probably a several thousand ton. I think he even said over maybe 3,000 to 4,000 ton deficit in a 3,000 to 4,000 ton market, and we're seeing that become more and more mainstream, and I believe the reason why they finally just took a step back from full transparency is that people are beginning to understand that the gold going there is not coming back, and that means that the power equilibrium is shifting toward China. That scale is tipping, and it's not going to be tipped back anytime soon. And that's making a lot of people wary. So I think that for the sake of what they want to do, that is get as much gold as possible, China is trying to take a step back. They're trying to rein back in some of that instantaneous data, perhaps, and try to do it a bit under the sly, and hopefully not make it an issue on the especially on the alternative media side, every other day.
From speaking with Kuz Jansen and also reading his articles, and I also tend to sometimes read the comments underneath them because there's a lot of precious metal experts that comment underneath his articles. It seems that, a lot of the Wall Street investment banks, they became aware of the Shanghai Gold Exchange withdrawal numbers from his research, so they were aware of the numbers, and yet, those more accurate numbers were not reported in the World Gold Council numbers or the numbers from the investment banks who research the gold market, and yet one thing about the gold market, no matter which country is involved, Watchman, it always seems that it's intentionally being covert. So whether it's gold acquisitions or secret IMF gold sales or things like that, very rarely is there actual public announcements that, oh, we're going to sell this gold, or oh, we're going to buy this gold, or things like that. Normally it's only Zero Hedge or the alternative media that announces, oh, Germany just repatriated 366 tons of gold in the last 12 months or something like that.
No, absolutely, absolutely. I really think that's what it is, and we don't know yet if this is going to be like for instance, they've been giving out reports, every week. I mean, basically, every week what 10 days ago the data was. I mean, that is the standard for transparency around the world. I mean, no one else is reporting on their gold sales. It comes even close. It's possible they're trying to rein back in the frequency of reporting. Maybe do it in steps. We don't know if they've gone cold turkey yet. It seems like they might have. But what I hope happens instead is that they just rein it back instead of a weekly report, maybe a monthly report, maybe a quarterly report, instead of just saying, well, that information is for our eyes only. Now, I understand why some would wish to do that because, as you have rightly pointed out, gold is so secretive because it's so. The reason why the powers that be are so secretive about gold is because gold is that important. They run an enormous con, through the banks. They run an enormous con through, the stock exchanges. They run an enormous con controlling all these markets all over the world. But none of those cons work if their first con goes down the drain, and that is managing the prices of precious metals, because precious metals are their first and their largest, their eternal competitor to a banknote of credit, or whatever script they want to put out, whatever digits in their computer. If they want that enormous power to issue trillions and trillions and trillions of dollars of script and credit, they have to get gold under control, and to do that, they have to keep people in the dark about what goes on about gold. I forgot who it was. Maybe it was Chris Powell. Somebody from GATA said years ago that governments are more open about their nuclear secrets and nukes and nuclear technology than they are about gold and their gold reserves. I think there's an enormous amount of truth to that, because they all know that the real power to enormous empires like the U.S. empire and other empires of history has been a money power, especially in the last several centuries, and that money power evaporates when they cannot control gold and especially silver. So I would expect a little bit less information to come out of China. I expected it perhaps further down the road, but it's happened a little bit sooner than I thought. But on the other hand, we've been able to see things so clearly for the last decade from that sector of the world that it's painted us a picture that is ingrained in our minds. It's not going away, and everyone must know, to all the Wall Street for Main Street listeners and all the Shield brothers out there, they are going to be stacking more than ever. Okay, that stacking is not going away, especially when others are not watching them. I would expect large, billionaire Chinese investors, and perhaps even the Chinese sovereign, to come in as well when they can buy with more impunity because they have more secrecy. So whereas they probably haven't bought there in the past, now they might. I mean, now that it's right there and it's more cloak and dagger. So that's something to bear in mind too. This could open up the door to heavier demand from people who felt uncomfortable about the transparency there before.
That's a good point. Yeah, I think one of the main reasons if they do stop, and Kuz Jansen, I don't know if you had a chance to read his article about it, but I think he actually got a quote. He managed to get a hold of one of the people who released the data for the Shanghai Gold Exchange withdrawals, and he said they're not releasing it anymore. So I guess it looks like we're not even going to get it monthly now. But it does seem to me one of the reasons they wouldn't want the data release is because they don't feel they have enough gold yet. So they do want to be able to continue to accumulate either more physical metal or maybe start buying even more of the miners. We know that the Chinese gold mining companies and from backing from the Chinese banks have started to buy, gold mining interests in Australia and Africa and things like that. And I think they even bought a big chunk of one of the Barrick spinoffs. I think it was West African Barrick or something, or African Barrick, something like that. But I'm actually very surprised we haven't seen some of these large Chinese miners financed by the Chinese government or large Chinese banks, which are, state-owned, go in there and start buying up the gold in the ground yet. I think that's coming in the next couple of years, too.
Absolutely. Well, they've already begun it. It's a process, though, that you've rightly pointed out. Let me just give you a little story. Back during the last crash, okay, I bought basically one of the darlings of the Australian mining company, the gold and copper. It was a gold and copper company, and they had an excellent balance sheet. They had good fundamentals, and they had good assets in the ground. But the perfect storm hit in 2008. Their stock nearly went to zero, and they froze all shares for about a month. While those shares were frozen, they bought – the Chinese came in and bought out that 90% of the mines and projects in that particular company. And they're moving in heavily into Africa right now. I mean, I posted an article several weeks ago in the last month about Zimbabwe, about how they're moving in. They're doing joint partnerships with Zimbabwe. They're doing it over diamonds. They're doing it over gold. They're doing it over platinum. There's some very, very good, highly sought after, highly strategic resources in Zimbabwe, and China, Mugabe, and others are trying to create long-term partnerships because, to be honest, Zimbabwe is basically a failed state. They're total failure, and to pull their irons out of fire, China's going in because they're cash rich, and they're just saying, we will buy you time, we will patch up this, and this, we will plug this gap, but we want a joint ventures with some of these mines. We want our yuan to be used in your economy. So I think you're right. I think you're going to see China more and more go straight to the source. They've cornered probably most of the available gold that sovereigns and large parties are still willing to sell, that's still available above ground. And now they're using this enormous hoard, this huge mountain, this literal mountain of dollar reserves, just to go on a buying spree of future sovereign assets. I expect to see that more and more as we go along. It's an excellent point you brought up, and I would pay attention to Africa too, because at these gold prices, the mining sector, as you well know, that's your cup of tea. I mean, you're the expert there. But the mining sector is absolutely being decimated. But from the ashes and from this nuclear winter we're witnessing, there will be a future. There will be mergers and there will be buyouts, and they'll keep mining metal. It may take a hit as far as supply goes for a while, but the large players will step in. They'll consume the small players at pennies on the dollar, and China will do just that all over the world.
Yeah, and not only are with manipulated paper metals prices have that caused problems for the miners, but a lot of the miners' problems are also self-inflicted. You know, they did bad deals, they did acquisitions at the top, they overpaid, they took on way too much debt, they sold a royalty or stream at a bad price. So a lot of these management teams at the miners, you know, they've diluted the stockholders. There's a lot of junior gold producers right now that are still producing. The management teams don't want to leave their jobs. So they keep, you know, they should sell out to a larger miner who can optimize the mine. And instead, you know, they just keep diluting shareholders by selling millions of shares so they can keep their cushy salaries and things like that running the small miner. But, you know, we have COMEX ratio now, I think, for silver. It's over 500 to 1. You've done videos recently about this. What do you think will end the manipulation then?
In silver or gold?
How about both then? You can answer one at a time for both.
Sure, yeah. I mean, you're right. The last week there has been an enormous stress that's once again cropping to the top. We are seeing, and I wrote an article about this, and I intend to probably write another article early next week about this. But about 2 months ago, I wrote when we reached 128. I mean, that was big news then. Wow, 128. Does it get any worse than 128 claims per ounce of gold, than that? And I said, of course it gets worse. I mean, like just a few months ago, it was 20 and 30 to 1. Now it's 120. I said before this is over, before this thing snaps, you're going to see 200 to 1. You're going to see 500 to 1. You may see 1,000 to 1. And that's exactly what we're seeing. I mean, like we like you rightly said, we hit like 530, 540, 550 claims of ownership per ounce of registered gold at the COMEX. I think at the low point it was 78,000. They've sort of kind of been pulling their little stuff where they try to put in 8 to 10,000 ounces at a time. They've done that the last couple of days and brought it back up to 88,000. Whatever. They spent 2 months building up that registered, and most of that work was gone in one day when 200,000 ounces came out at one time. So you're exactly right. They are going to stretch. I mean, this thing is this con is a great rubber band that they're winding around. They've wound it around the corner so many times. It's so tight that it's going to destroy them. It's going to snap, and when it snaps, it's going to snap so hard that people will have never seen anything like it. Now that how the repricing happens with gold and silver could happen one of several ways, but you've hit the ball on, squarely on the head there. What we're probably going to see is at some point they're going to reach a threshold in the registered category where they just say, well, the markets are broken. That's what they're going to say. Like, the markets are broken. Something happened. This is no longer a functional market. We're going to close all these orders for a while, and we're just going to stop the bleeding. They're going to do that with silver too. By the way, I just saw this, and I'm going to write about this as well. But I've been writing about silver particularly, and how silver stackers, as supply goes down and demand continues to increase. Last year, the price was down about 18%, but our demand was up like 21, 22%. I mean, stackers put away between 140 to 170 million ounces of government coins and rounds and bars. Unprecedented. Biggest in history. It's going to get even better. That is, unless they shut down all the mothball all the mines and the governments go strictly to rationing. However, what we're seeing is that we are severely digging in to the amount of silver available for the powers that be to play with. Right now, they've been bleeding about a million, 2 million ounces in a bad week at the COMEX. But just yesterday, on Friday, January 29th, the COMEX registered silver lost like 7.7 million ounces in one day. I've never seen anything like it. I've never seen a one-day withdrawal that big ever. And I just saw that news about a half an hour before I came on your show here. I mean, that is very new news. And what you're seeing is that we in the registered category, that's the silver that's available for people to buy that's not supposedly owned by others. They were at 35 million ounces, which is the lowest in years. That took it to 28. So what you had was 20% of all registered silver leaving in one day. That takes it down to 28 million ounces. That's the lowest it's been since the supply squeeze started. The wholesale squeeze started in 2011, as Ted Butler said. It was not allowed to get out of hand, but it started to get out of hand, and they chopped it off at the legs with their May Day massacre. But that's going to happen again. That's going to happen again. They're keeping it so low for so long that they're going to reach a point where they say the silver market is broken. They're going to say something like that. They always blame markets, and it's not the market's fault, but they always blame markets when it's just their crime. And they're going to say, well, we're going to stop all buy orders. If people want to sell to us, we'll accept that. But at that point, if that happens, they're going to lose all credibility and perhaps even the ability to dictate what the price of silver will be for the rest of the world, because it's not just in New York. I mean, you had this crazy freak accident thing with the London silver fix just a couple days earlier. I mean, where they had a flash crash of like 6%, like nearly $1. in silver from like 1430 to 1350, and then for nearly a quarter of an hour, all the producers, all the refiners, all the jewelers, all the bigwigs out there had no idea what the price of silver was going to be, what they could lock in, in forward contracts. They had no idea. It was chaotic, and that's the kind of chaos I can appreciate, because that chaos means we're getting close. We're getting very close. Yeah, people say, well, Watchman, how close are we? My answer is always, we're one day closer than yesterday. That's all we know. That's the million-dollar question. We do not know the day. We do not know the hour. We do not know the moment it will snap. But we do know it will snap because it's a con. It's a Ponzi. It's theft. And cons and Ponzi's always end the same way. Utter failure and utter ignominy for the people behind it. The same will be true this time. And the people who believed, believed in the fundamentals and knew what they knew to be true and stuck to their guns are going to make out like bandits.
Having researched the gold and silver market since around 2008, I can tell you, like, trying to predict the exact time when things will break or the manipulation will end, it's a fool's game. But, you brought up good points there about the LBMA. I mean, are they going to go to cash settlement? They'll blame it maybe on the evil hoarders, the evil people stacking physical metal, your evil hoarders or the greedy speculators. They did this. Congress did this when the oil prices spiked in the 1970s. They may do this again when gold goes over $2,000 an ounce or something like that. But in terms of the manipulation, I don't know if you agree with this, but I think what's really going to break, because we're obviously seeing the total leverage ratios of paper to metal continue to spike. It's becoming theater of the absurd, where we might go to 1,000 or 2,000 or something before it breaks. But, I think the strain, obviously real physical demand is still strong. The problem is going to come on the supply side because, the miners can't handle a manipulated price environment. You read my report about this. I use the Wile E. Coyote and Roadrunner analogy. The miners are Wile E. Coyote. They never catch the Roadrunner. They always get screwed here. And, some of it is their own doing, but a lot of it is, every time the paper price is manipulated lower, they're always behind the curve trying to cut costs just to survive. And they've somehow managed, I guess, to stave off bankruptcy for the last 4 or 5 years. But I don't. They're running out of road. I don't think they have any more creative ways to stop bankruptcy. And we're starting to see this with the news. I don't know if you saw it a couple days ago. Endeavor Silver, which is a pretty good mid-tier producer of silver in Mexico. They're considered one of the more efficient silver producers. They announced that they're cutting silver production by 25% by the end of 2016. And this is one of the more well-run operations. They run mines pretty efficiently. And for them to come out with an announcement like this, even with a weak Mexican peso, where the silver price is still pretty strong, they still can't get one of their mines to run economically. So I think we're starting to see a situation here where, the miners are almost completely out of road.
I completely agree with you. I think that's a very strong thesis that you've put forward. You've written about it and done videos on it, several times. I completely agree with that. Endeavor Silver, actually, I don't own a lot of mining shares. I own a few. Endeavor Silver is one of the better-run companies, as you've said. For them to come out and announce that they are going to cut production by 25% in the coming year is an enormous straw in the wind that stackers cannot ignore. They cannot afford to ignore it. There will be more that will come out like this, and they should. I mean, why should they bring up the only product they have, a product that was kingly wealth, that was respected, loved, trusted, and desired around the world for thousands of years? Why? Why should they bring it out of the ground for a loss to give it away every single time? It doesn't make any sense. Now, I applaud them for that. I know that it's self-preservation in some ways, but, they're going to be the first of many. There's going to be many other, primary miners that cut production. There's going to be a lot of base miners that are going to cut production. I've said this for a long time, and I believe you've said the same thing. I've believed forever that we were going to see the crashing base metals prices take they're giving enormous body blows to these base mining companies. I mean, a lot of them are in the same nuclear winter that the silver and gold.
They're worse.
Yeah, absolutely.
They had base metal prices that keep going up for 12 years in a row. They hedged their copper price at a higher, so they took on even more debt.
Yes.
And yeah, I think it's going to put a lot of stress on the silver because so much of the byproduct from the base metal miners is the silver.
Absolutely. Nearly 2/3 of silver still comes from the base metal miners. And when in 2008, when I saw the out and out collapse, the collapse of the world economy, the collapse of the miners who were supposed to be bulletproof, like one of the ones I owned, they had $1 billion Australian in the bank. And in one business quarter, maybe two, they went to nearly nothing. That's how quickly they ate through it in a global panic. That's going to happen again. Now, we're already seeing the supply from some of these base miners start to really, take some body blows. But now, when you throw in the primary silver miners beginning to cut, the writing is on the wall. They are not going to be able to crank out 800 million, 900 million, 1 billion ounces of silver year over year over year for sub $16 prices. It's not in the cards. It's not going to happen. They've tried to make it happen for the last several years, and as you've said, they've thrown everything out but the kitchen sink, and they're barely surviving, and they're not going to be surviving much longer, especially if they try to take it any lower from here, which they might. They might. These people, they're crazy. I think they're going just to tamp it down until it's impossible, literally impossible to hold at that point. And so I think I've maintained that the mechanics for the gold and silver bull market, which is still with us, the mechanics for that bull market somewhat changed in 2011 because of the credit downgrade that the U.S. received from some of the more honest credit rating agencies, Egan-Jones and some others, and look what happened to them for their honesty. They got fined, and they, some of them nearly got arrested, and that they couldn't write anything for a while. So yes, there's systemic, not just greed. There's crime. There's crime everywhere in the entire system, and we're seeing it beginning to end with gold and silver. So I would definitely watch what Endeavor's doing. It's going to spread, and they're going to take two shots. They're going to take a shot in supply from primary, and they're going to take it from base metals as well.
Yeah, I agree. I think over the next couple of years that will definitely play out. And, like I said, with Endeavor, that's with a cheaper Mexican peso. So their silver price, which is not in dollars, their silver price in Mexican pesos is high. So they had a currency advantage, and they still couldn't keep the mine economic. So that's, a lot of these miners are in developing countries like Canada and Mexico and Brazil and Australia where they have weaker currencies relative to the U.S. dollar, and that's helped some miners. But the problem is some of these miners, they have a lot of dollar-denominated debt.
Yes.
And once you take on debt to open that mine, especially if the mine was higher cost and you slashed it, you have to keep running the mine to pay off the bankers.
That's right.
So
that's right. They've got them. They've literally got them by the hair. They've got them by the neck. That's absolutely right.
Yeah, I agree. I mean, I've spoken off the record in the past with some mining executives, and they'll admit the gold and silver paper prices are manipulated, but a lot of them, they won't admit it in public other than really Keith Neumeyer, because a lot of them owe so much money to the banks. They're afraid that the banks will, get them replaced as CEO to someone who's more complacent. So they're like good little obedient sheep once they take some debt from the bankers.
Yeah. That's not surprising to hear. It's sad to hear, but not at all surprising. And a lot of it is self-preservation with these CEOs, with these boards, and with these companies. And I guess I can understand the conflict there, but everything that they stand for, every asset that they have, everything that they love and they work for is being destroyed. It's being destroyed on purpose. And I don't know if I could sit there and be as complacent. I would want to be a Keith Neumeyer. Keith is a very heroic individual. I really I admire him. I think he's taken an incredible stand, and I like some of the ideas that he and others have put out. Like a mineral bank. I like that idea. I think on the other side of the collapse, on the other side of the reset, on the other side of a new monetary paradigm, that would have a great future. Right now, it would be very difficult to implement, because of how absurd the rigging has become, the lengths that they have gone to, and how warped it's become. It would be very hard right now to do that, but I believe that has to have a future to give people real options other than more of the same. And I think that will have a future on the other side. I really like Keith. Yeah.
Yeah, and I think, these silver prices, like you said, unless gold and silver, gold goes back up to like 1250, 1300, 1350, we're not going to see any new, I think there's only 4. I was looking at True Gold Mine, which is in Burkina Faso. They have the Karma deposit. They said in their January 2016 presentation that they're one of only 4 new gold mines coming online. And we're producing an enormous amount of gold production, so that those are reserves and production that's been depleted and not being replaced. So something's going to have to give with the supply where you only have 4 new gold mines coming on in the next 6 months. That's not as sustainable to keep the supply levels this high if the price doesn't rise for both gold and for silver. But, also in the LBMA, we're getting absurd amounts too. I read underneath the Koos-Janssen article about Shanghai Gold Exchange, not reporting their withdrawal numbers anymore. The LBMA vaults are now down to 6,500 tons from 7,500. So there's been 1,000 tons of gold that is left, and obviously there's no receipt or no one claiming who bought it yet.
Right. Yeah. I mean, the LBMA is really the head of the beast. I mean, some of your listeners may be aware that that's where the con started. The City of London is really where it started. Then after World War II, especially, they kind of and maybe right around World War I, if you want to count the creation of the Federal Reserve, where they kind of jumped the Atlantic and they said, hey, why be competitors? Why not milk humanity together? So now you have kind of the Anglo and American regions through their banking centers in New York and London working hand in hand for the same nefarious purposes. But yeah, absolutely. I mean, the banking families, the Rothschilds and others that have really operated out of London for the last, 2 centuries plus, they've seen the writing on the wall too, because Mr. Rothschild removed himself really from the LBMA clearing system, I think about 10, 12 years ago, and they've tried to move on to other pastures. But yeah, there's going to be an incredible amount of stress that's going to build up in the LBMA, just as like it's building up on the COMEX. The problem with the LBMA is that it's more opaque on purpose. They don't want people again to know what they're doing, because when people know, the game is over. Like, these people are vampires, and the slightest little bit of sunshine, absolutely starts burning them. I mean, their cons cannot survive oxygen. So I agree with you. 1,000 tons that's come out of there to other sovereigns, to China, to other people, big investors off the books. Even in the Arab Emirates and other places, there's a lot of big gold buyers out there, and they want to do their gold buying, kind of discreetly. So it's no surprise that you're seeing that drain. That drain is going to continue to happen. The only question is, what is the threshold where they say this much and no more? Like the London gold pool, they finally closed shop, but they did it well before they hit zero. And the powers that be here in the United States did the same thing. They didn't let their 20,000 tons go down to nothing. They cut it off at roughly 8,000. And we know that 8,000 has probably been loaned out many times. It's probably largely not there anymore. But the point is that every con ends, and that the LBMA is still the heart of the con on that side of the Atlantic, and the COMEX is still the heart of it on this side. But all the stress that's building up is going to lead to the dam bursting, to really financial chaos. Those who were not prepared, who didn't see it coming, are in for some real shockers, some real unpleasant, uncomfortable surprises. But people who listen to your show, the people that I've tried to educate and enlighten about it, that they will hopefully know what's coming. They'll be prepared for it, and they will fare far better than the average person on the street. And that's why we do what we do. I do what I do because I want as few victims of this con to be burned as possible when the lights go out.
Very well said. I have one more question before I let you go. Do you expect more mainstream people who haven't woken up, maybe large, billionaire money managers on Wall Street who are more Keynesian, but maybe they chase price patterns? Do you expect a lot more people to come back into gold and silver the more the stock market falls or crashes, the more the bond market starts to get volatile, maybe crashes, the more real estate, some of these credit bubbles and student loans or autos or the real economy starts to crash? Do you think that's going to be the signal that the people who maybe bought gold and silver after 2009 and sold it in 2011 or 2012 and said, oh, I don't need insurance anymore, my asset prices are going up, do you think that's going to be the signal then that they're going to start getting back into the market again?
I think so. I really do. I just got done watching The Big Short a few nights ago. Excellent film on all the shenanigans going on before the last crash. But one of the big takeaways from that movie is that you had a lot of brilliant people who knew how to, they knew how to chase money, they knew how to make money, they knew how, they knew the algorithms, but they didn't know necessarily what was going on actually in the real economy. I mean, we think that everybody knows. Well, some of them know, but a lot of them don't know. They're just in it to make as much as they can.
Fast money.
That's fast money. That's absolutely right. So
they only care about this week or this month or quarter. They don't give a shit what happens, 3 years from now or 5 years from now.
Precisely. So you're going to see a lot of people. You're going to see a lot of hedge fund managers. You're going to see a lot of money managers, tech funds. When they start to see some of these credit bubbles pop, when they start to see the broader carnage happen, when the equity carnage doesn't stop, when it keeps coming, they're going to have a huge gut check, and they're going to say, okay, let's focus not so much on chasing these dollars and getting fast money. Let's focus on how do we preserve our capital, the capital that we have. How do we not lose everything? Because last time, only TARP and a few other things really stopped everything from going down. I opposed TARP on a philosophical level. It was theft from the American people. It was theft from taxpayers and citizens, and they gave it to the same people who blew bigger bubbles now and who are doing the same stuff. So obviously it didn't solve any of the problems, but what it did do that I'm thankful for is it bought valuable time, because I got to be honest, I didn't know any of the things. Almost any of the things that I know today, I didn't know them back then. I'm glad that I had that extra 7-8 years. I'm glad that maybe it's selfish of me, but I'm glad that it didn't go down with a full collapse then. I mean, I was only partially ready then. I was not nearly as ready as I am now. So I hope that is the same rings true for thousands and thousands of your viewers and listeners, and many of the people that I've been able to reach. Together, we can continue to make a difference, to make sure that there are people just ready for this to happen, not necessarily wanting the bad to happen, but just know it's going to happen, and they're psyched, they're prepared, and they know why it's happening, and therefore they won't be scared when it happens. So I think that the big money is exactly like that. A lot of them, they will go into preservation mode and preservation of capital mode. At that point, you'll see whatever gold is left. It will be an inconsequential amount of gold left in New York and on the open market to buy. And when that happens, they're going to bid it up like mad, and it is going to be it's going to be fun, and it's going to be terrifying.
Yeah, the big shot, I completely agree, and that was very well said. But the big shot money managers, the billionaire hedge fund managers like Ray Dalio and George Soros, they were at Davos in the last couple weeks, and our listeners could go watch those interviews and discussions online about those. And they were talking about how, asset prices are getting toppy, and they're selling their assets, cashing out, they're going to cash, and some of them mentioned gold. So I think the trend, the writing's on the wall, that a lot of the smarter money that has made money riding up this reflation from the central banks, this BS wealth effect that the Keynesians lie about and say, oh, it benefits, everyone on Main Street. It didn't.
Right.
But
no, absolutely not.
Yeah. But yeah, I think the more these asset prices fall, I think the higher gold and silver prices are going to go, the more the regular asset prices fall.
Yeah, that's right. And you could see, in an out and out collapse like 2008, where they no longer are able to control the prices of gold and silver because they don't have enough of it to sell into the market anymore, to cap prices as they did in 2008. That's the big difference between now and then. Back then, they had enough gold and silver. But that was before bleeding gold to China for 8 years. They do not have that gold. That gold is gone. They do not have all the silver. They've bled through their excess silver reserves. Right now, in silver, I literally believe they're going hand to mouth in silver. I believe it's going from the refiners, basically straight to the exchanges. I mean, I believe all the new silver coming in is literally new silver. They don't have any idle reserves. So that's the difference.
Yeah, I think SLV is empty too.
Yes.
I think they're, they haven't audited it. So I think, to stop the bleeding for the last 5 years to keep the silver price managed, I think they basically emptied SLV and haven't proved that there's any actual metal in the vault with real independent audits.
Absolutely. And if there was, one signature, can take it, and it wouldn't be enough to stem the tide, because the entire world would suddenly realize why. Everyone asks me, well, why do I need this, this rock? And that's what they all call it, it's a rock. Well, why do we need this pet rock? Why do we need this shiny rock? I was like, first of all, you're mislabeling it. But second of all, humanity has needed it, is needing it, and will go on needing it for thousands of years, because it is sovereign, tangible value. It is stored wealth, and who wouldn't want that? And once you understand why those properties exist, then you when you get your head around it, it changes how you see everything in the broader global market. So I absolutely agree with you. Now, folks, now is the time. I know that it's hard for some who've been stacking for a long time to do it just a little bit longer, just a little bit more. But my gosh, I mean, you can get it for less than a mine can get it, and they own the means of production to make it. You can get it for cheaper than they can make it. They're going bankrupt. That's their folly, but it's your gain. You can go out and you can get as much silver as someone is willing to throw at you. That is not going to happen forever. It's not going to happen perhaps even much longer. So I know the last 4 years have been a grueling psychological war on stackers, but that war will be won by those who held fast and planted their spears and said no to the enemy. We're not running. We're going to keep advancing. We're going to keep buying. We're going to keep stacking, and we're going to keep pushing and cutting into your reserves every single day, just like we're doing right now. This has an end game. It has a shelf life, and my gut tells me it's not that far off.
Yeah, I think the key is to watch the miners and the supply. I think the COMEX leverage ratios, they can continue to get out of whack. But once we have, some really large miners go bankrupt, or really large mines from these miners, shut down or cut production massively or things like that, that's going to be the warning sign that the market is going to be close to, clearing and starting to move higher again. The bull market's back. I just want to thank you again for your time, Watchman. I really enjoyed it. And for our listeners out there who aren't familiar with your channel, you have over 300,000 views on YouTube, and you cover the gold and silver markets very well. I think our listeners would gain some value there going to your channel and subscribing and also watching your videos. I've learned quite a bit more about the gold and silver markets. You have a good way of using analogies and pointing things out.
Well, Jason, thanks so much. Yes, my YouTube channel, The Wealth Watchman, and there you can get links to my website, thewealthwatchman.com, where I also write articles as well. Jason, you and everyone at Wall Street for Main Street does a fantastic job of trying to fight for the little guy, trying to fight, give a fighting chance to those on the street who wouldn't know any better otherwise, because the bankster-owned media is certainly not going to tell them. So you keep on fighting the good fight. It's been a pleasure being with you, and thank you so much for what you're doing. Thanks for having me on.
Great. And, we can have you back on in the near future for sure. And hopefully the gold and silver price will be higher and people won't be as negative. I heard a recent interview with Eric Sprott, talking about the gold and silver markets on Silver Doctors. And he just sounded, his tone was very somber.
Yeah. Well, I mean, that poor man's been on the front lines, and he's taken some hard hits. But in the end, I believe he'll have the last laugh.
I think he will. He's a good value investor. He's had a rough last 5 or 6 years, but his 30-year track record is really good.
Yes, I agree. He's excellent.